Cool.
So congratulations, I guess, on moving into your new office.
Thanks. Yeah, it's very exciting.
And I kind of wanted to ask you a little bit about how you personally got into Bitcoin, but I think a lot of my listeners probably don't really know a lot about Bitcoin, and I really haven't explained it because I'm probably not the best person to do that. So I kind of wanted to ask you, first of all, what is Bitcoin, in a nutshell, and kind of how did you get into it?
Okay. Let's see. Well, all right. Well, let's start with how I got into it. That's a shorter story. How I got into it was like just a few months ago, really, only like maybe 3 months ago, or 3 or 4 months ago now. I just what was it? Oh, I was on Twitter. I'm big on Twitter. I've got like 12 or 13,000 followers there, and I tweeted some kind of a comment, some remark about Bernanke or the Fed, Federal Reserve or something, and somebody tweeted back to me and said. Something about you should just use Bitcoin. And I'm like, what's a Bitcoin? What is this? Another spammer. But he's like, no, you should use Bitcoin. It's a new cryptocurrency. And I'm like, well, what is it? And I was just like, what is it? And he was trying to explain it in a real short message, and I didn't get it. And but he kept me engaging me, and so. Finally, I said, okay, it's an electronic currency. Why would I use it? What's the advantage? And somebody finally replied and said, let me explain it in 4 words. Briefcases full of cash. I was like, oh, I get it. Okay, now I get it. All right, so that kind of leads to what is Bitcoin. The short story.
Briefcases full of cash on your computer.
Yeah, except
I mean, it's briefcase is your laptop or your
so
desktop, and in the future, I assume it'll be like a cell phone or a smartphone.
Yeah, by Saturday. So here's the story. So okay, yeah. First of all, I mean, it's electronic. It's like an email. It's as easy to click and send, whether it's a trillionth of a penny or $1 trillion. I mean, it's as easy to send as a click. And it really is divisible like that. You can send as much or as little as you want. And it's up to 11 decimal places. So you can have 0.0000001 Bitcoin, And
right. So if the value goes up significantly in the future, you can always divide it. Because
exactly.
right now it's in a deflationary period where, I mean, I don't know if you want to talk about the price a little bit relative to U.S. dollars, but in the last couple weeks, we've seen a huge spike in the price of Bitcoin. And I only heard about Bitcoin a couple weeks ago, but I guess it's been around for a couple years, right? And the price the price relative to U.S. dollars has kind of stayed relatively, under $1 is from what I can see.
Yeah, well, yeah, if you look at the all-time chart on Mt. Gox, which is mtgox.com, you'll see that it's existed for 2 years. It was kind of launched as a kind of like a pilot, actually, like a test pilot, experiment. It was very experimental. But it has worked out really well, and so people started using it. So anyway, it stayed, originally it was like about half of a cent, half of a US penny per Bitcoin, and then but then it went up to about 6 cents, and it stayed about 6 cents a Bitcoin until right around the 1st of November, and that's when everything changed. I don't know why. Maybe it got some press. I heard it got slash-dotted or something. Somebody reported about it in a blog or something, and then it started spreading. Word started spreading about it, and so it went from 6 cents to whatever it is now. I mean, I think it reached a high of like $4.20 or
$4.25
around $4.25 is the high now.
Yeah, and it's been bouncing up and down between $3.50 and $4 lately.
Exactly, and I can tell you probably why that's happening too. But it's always been a little bit volatile, so it's always been going, up and down. But overall, the trend is always up, and so it has gone from 6 cents to whatever it is now, 3.20 or something now. It's basically 60 times its value in 6 months. So it's tremendous upswing. And also, at first it was like a 45-degree angle going up, but now I call it more like a hockey puck. It's going up and then straight up. I mean, not a hockey puck, but a hockey stick. And so it's going straight up, and I don't see that slowing down at all. The only reason it's had this little fluctuation lately is because Mt. Gox is the #1 exchange site where you buy and sell bitcoins for cash. There's a lot of them, but one of Mt. Gox is the main one. And it's been coming under some DDoS attacks, which means distributed denial of service attacks. It's kind of like being jammed by some
Right, it
unknown.
basically overloads the server
Yeah,
with a
yeah,
lot of page requests.
yeah. And what that, I mean, basically, the only thing that means to people really, the result, or I guess what I would take away from that knowledge is that it's reached the big time. It's reached, it's becoming mainstream. Okay, so because of that, of course, everybody knew that anything that is big and important is going to get a DDoS attack eventually, but he just didn't realize, the owners didn't realize it was going to happen so soon. So anyway, they're moving, they either have today or in the process right now of moving this whole exchange site to new servers that are protected with a DDoS shield technology so that won't be an issue. But so if technically it doesn't really affect anything, it's just, the pages haven't been loading for a couple hours at a time here and there. But people don't know that. And because people they don't understand what that means, they're a little bit queasy, so they get fearful. And that's why there's been some selling going on. So actually right now is a great time to buy, because as soon as that DDoS stuff is resolved, which it will be here in a day or so, I believe the price will just get right back on the fast track going up. So that's the story of that. Now, so what is Bitcoin is, my explanation is this. It's important to realize that Bitcoin, it's not a stock or anything. It's a digital electronic currency. It has many of the properties of cash. It's not digital credit cards. It's not electronic checks. It's more like electronic cash. So it's as anonymous as cash, and as anonymous, as untraceable as cash. It has the properties of cash in that it's irreversible. If I, give cash to somebody on the corner, I don't even have to know them. I just give them cash. I can't get it back. So the same thing with Bitcoin. If I send 1,000 Bitcoin to you, I am not going to get it back unless you take a new transaction and send it back to me. So it's irreversible. There's no such thing as a bounced check or credit cards charge back.
Right. Whereas something like PayPal, for instance, is where you can initiate a charge on PayPal and then you can request to take it back.
Yeah.
And PayPal will actually rescind that charge if you say, well, the guy didn't send my item, or maybe he did send the item and you're not being honest about that.
Exactly.
But you have the power to cancel that PayPal transaction, and I guess under some law they're required to do that.
Exactly, and it's very well. I don't know if there's a law, but it's the way it works, and so it's just how they do it. PayPal will actually, if they don't like what you're buying or what you're selling or what you're doing, they can actually just close your account and seize all your money and not return your money and give you no appeal whatsoever. And that's happened to many, many people I know. And on top of their exorbitant fees and stuff. So this is a great alternative to that. Merchants don't like that. When somebody buys $1,000 worth of goods and then 5.5 months later, up to 6 months later, PayPal can reverse the charge. And MasterCard or Visa, same thing. Up to 6 months later, a MasterCard or Visa can be charged back. And it's absolutely wrong. It's not fair to the merchant. So the Bitcoin is much more fair in that way. And there's even if you don't trust the merchant, which could be like if you're buying something from a stranger, there's a service called Clearcoin, right? Clearcoin.com. This what?
It's the AppSpot.
The AppSpot. Okay, yeah. So you can just Google Clearcoin, and there's a service which will do an escrow. It's an escrow service. So the buyer can put the Bitcoin, the money, into an escrow thing, and when the seller, when the buyer receives the goods, then they can release it and it goes to the seller. So it's very, very, very safe and secure. It's really what PayPal is supposed to be and what people expect it to do. Mm-hmm. Bitcoin actually does do. It delivers. And there's zero transaction fees. So there's benefits like zero transaction fees, it's irreversible, cannot be charged back, and it's instantaneous, and it's as anonymous as cash. It's as easy to send as an email. It's really brilliant.
So speaking of PayPal, PayPal is, I guess, what you would call a centralized server system. Right. Whereas if I want to send you $1 through PayPal, what happens is I send the message to PayPal, that dollar goes to the PayPal servers or sends a message to the PayPal servers, and then it comes right back to you. But whereas
Yes.
what happens with Bitcoin is it's peer-to-peer, it's decentralized. So in other words, if I want to send you a dollar, and I don't want to use PayPal, I want to use Bitcoin, I can send the dollar directly from my computer to your computer.
That's right. That's a very important thing too. Yeah, it's decentralized in that it there's no central bank, there's no central issuing entity, no Bitcoin company or
Ben Bernanke can't create a Bitcoin and then put your children into debt for it 100
exactly.
years down the road.
Exactly. You basically the only way to. I mean, one of the key things about Bitcoin that a lot of people forget to explain is that there will never be more than 21 million of them. So that's a really important thing. Nobody can make more than 21 million Bitcoin. So because of that, it's okay. Let's see. I'll explain it like this. Bitcoin is the combination of three technologies. One is the idea of the state-of-the-art cryptography, which is I forgot what they call it, something like elliptical curve 256 HA or something like that. Whatever.
That's above my head.
Something. Yeah, anyway, the state of the art in cryptography, okay, which is much, much more secure than what banking uses today. And then the other one is the idea of a peer-to-peer file sharing, like the music file sharing that's so famous for, the reason why there are no more record stores, for example. Every 20-year-old gets their music downloaded that way. Like it or not, legal or not. Many countries it's explicitly legal. Many countries it's just explicitly illegal. Doesn't matter. They can't stop it because it's completely distributed peer-to-peer. So good or bad, that's the fact. So that's another technology. And then the third one is the idea of a very old technology, the idea of a limited quantity of something that we all agree has value. Then it's brilliant because it's a limited quantity.
And the production is controlled as well.
Yeah, exactly. Exactly. So
it's a predictable supply. Like one of the reasons why gold and silver had such appeal as a backing for currencies because there was a predictable supply, and it was created at a fairly predictable rate.
Exactly, because of mining. That's why they even use the analogy of mining. They
Right.
call it mining, and basically it's the idea of printing money. But at a controlled rate, because instead of dumping all 21 million on the market at first and then the Bitcoin being worth, a thousandth of a cent, they figured it would be more practical to make it emulate the way gold and silver came into the market. So they started out with just a few, and then I don't like to get into mining too much because it confuses people. Like what? But basically,
right.
The computers that run the network are able to create Bitcoins at a very, very controlled, standard, predictable rate. And the computers that run and use electricity to do this, they get they get to keep that Bitcoin by a reward system. So that's, just the simple idea. So basically it
incentivizes creation of the Bitcoin, but also what happens, to the best of my understanding, is that as time goes on, or as there are more blocks created, it becomes more and more difficult for the computer processing power to actually mine or process the Bitcoin. Is that correct?
Well, difficulty is adjusted like a thermostat. If the network says there's too many, it goes by the number of blocks per hour. And so if it knows if it's on schedule or not, basically. And if there's too many blocks per hour being created, then it automatically increases the difficulty. And if there's not enough, it decreases the difficulty. So the network regulates itself based on the how many blocks are being created, because it tries to keep it at, I don't know, something like 1 every 10 minutes or something. So if there's 7 blocks an hour, then it might increase the difficulty. Don't quote me on that, but something like that. So the idea is that overall, it will be a very, very predictable curve of growth of how many Bitcoins are coming into the system. And it's something like, anyway, there will never be more than 21 million. What did they predict, like 2023 or something like that?
By 2020.
By 2020, that's estimated that we'll have, it'll cap off at 21 million. It actually will never actually get to 21 million. It'll always be less than 21 million. But anyway, the point is it's a limited quantity. So they took these 3 technologies and merged them into one, and that's what it is. If you know that, I mean, a Bitcoin, when I discovered it, it was like 20 cents, and then the other day it was $4, $3, whatever. Eventually, Bitcoin could be I'm saying Bitcoin will be $1,000 a Bitcoin within a year. That's my prediction. Mine, of course, it's just as good as yours or anybody else's. I don't know, but
Right.
I'm guessing because see, when it was 20 cents, I told my partner, I said, "This is going to be Bitcoin's going to be $1 soon." He goes, "Yeah, in a couple years." And I said, "No, I think within a couple months." Well, we were both wrong. It was a couple of weeks.
Yeah.
So now my new revised prediction is that Bitcoin will be worth $1,000 within a year. Some people, I mean, most people think I'm crazy, but some people actually think I'm low in that figure. So who knows? But whenever, if Bitcoin ends up being at some point, worth $100,000, then we'll be actually transacting business in micro Bitcoins or something.
Right. It'll be let me send you this 0.0001 Bitcoin.
Yeah, exactly.
But it's
Bitcoin for
divisible that way.
Starbucks.
So if it ends up deflating to that point before it stabilizes out, then you're still able to transact. Whereas you can't have you can't send somebody a quarter of a penny.
Yeah,
Assuming
right.
that pennies were actually valuable or the U.S. dollar was actually
That's right.
valuable.
And the other thing is, I mean, U.S. dollar is, we think of it as stable. It's just always slipping down, but slowly. It's like losing your vision so slowly that you don't even notice. You're losing the value. 90 the U.S. dollar is it's lost 96% of its value since 1913 when they started the Federal Reserve and
Pretty
they
amazing.
did the Consumer Price Index. So basically, since we started measuring it, it's lost 96% of its value. So what cost 4 cents then costs $1 now, or what cost $400 then costs what would that be? Whatever that is, $100,000 now. So anyway, the value is slipping. People talk about the volatility of the value of a Bitcoin, but it's only volatile. I mean, it's volatile.
Relative to the U.S. dollar.
Yeah, relative to the U.S. dollar. I mean, and it is even independently, it is volatile because it's obviously a lot more
Right.
volatile than the dollar. But there are a couple things. One is it's a new currency, so of course it's going to be volatile because people don't know what to make of it. Another thing is there's a lot of speculation. People are trying to buy and then they panic and then they sell and they buy and sell and they're doing these crazy day trading. The gambling bug bites them, and so there's a lot of that going on, which that has a vibration effect. And then but overall, if you look at the overall trend, it's just up, 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 up. So my advice I give my friends and family and myself, I call it BNNS, and that means buy now, don't wait till Wednesday, buy today. Because if you wait till Sunday,
Right.
because Sunday's not a banking day, people are going to sell more. No, by the time you wait till Sunday, it just went up another 30 cents. So I say buy now and never sell.
Yeah.
Don't get all excited when the price goes way up and sell, because I did that. When it hit 50 cents, I was like, oh my God, I couldn't believe it. I was so excited. I sold most of my Bitcoins, then I bought them back at 77 cents. So buy now, never sell. It's just going to keep going up. And the fact that it's volatile is like, is it a bad thing? Because it's not really a bad thing if it keeps going up. Because if you're a merchant and you accept Bitcoins and the value is going up, you have nothing to complain about. Now, the problem is when a merchant, if you own a restaurant and you want to accept Bitcoins for payment, well, obviously, if you get $3,000 in Bitcoins and you need to buy $3,000 worth of produce, if the thing drops 10% in value, that's not good. But the good news. Here's the good news. There's a bunch of merchant processing services startups that are specifically designed for Bitcoin that are about to hit any minute. And what they're going to do is if you're a restaurant owner or a merchant, they're going to set it up so that you can accept, like if you want the tab is $24.80. It will take $24.80 worth of Bitcoin, and as it receives it, it will sell it for dollars at the same moment, like within milliseconds. So you're guaranteed that US dollar amount will be deposited into your account the next day.
Right.
So that makes it absolutely guaranteed for the merchant to lock in that price, but it still gives everybody the benefit of keeping Bitcoin. Our company, onlyonetv.com is a new internet television network that we're just about to launch. And to my knowledge, we're the first company in the world that our landlord asked us to pay the lease in Bitcoin. So we're paying our rent in Bitcoin.
Wow.
I said, we'll do that, but I'm not going to pay you till 4:59 p.m. on the day it's due because it keeps going up, you
Right.
know. So, I don't mind accepting Bitcoin because it's going to go up. It just keeps going up. As long as you're not trying to turn it into cash the same day, then you need one of these merchant processors to sell it right on the spot.
Yeah, and it's kind of hard to convince people, or to kind of explain to people what is money, because money is just something that you all, like you said, something that you all agree upon that has value. It doesn't necessarily have to be backed by gold. It doesn't necessarily have to be backed by silver, but it's not created at the whim of the Federal Reserve. It's created at a
Yeah.
predictable rate, and as a result, because it's created at a predictable rate, then people are more likely to invest in it. And
Yeah.
like you said, in this deflationary phase that we're in now, where the value of it keeps going up and up and up, is great for the early investors, because the early
Yes.
investors that start with Bitcoin, um, as the price starts to stable out. I mean, do you see the price kind of stabling out? And like you said, it's relative to U.S. dollar, so it's kind of hard to gauge what it is. But
Yeah,
and
well, the
it,
US
it
dollar is more stable because it's it is its value. It's losing value, but it's losing value slow enough that you don't see it. It's like we're all spinning around this planet, but we don't feel like we're spinning because the Earth is moving with gravity, and we're spinning, but we don't feel it. The
right.
U.S. dollar is losing value, but we don't feel it. So it's a measuring tool that we all are familiar with. So it's fair to look at it as a value of U.S. dollar, but I do not see it stabilizing. I see it going up, 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 and eventually, I think I don't know. It's just my opinion. Whatever this is worth, I think that it will eventually come up to a roundish curve and sort of stabilize, but not until everybody on the planet is using it. I think
Right.
because until every single human is using Bitcoin, there are always going to be more people wanting to get Bitcoin. So the value is just going to go up and up and up and up because the demand will continue to grow exponentially and the supply isn't.
Right, and I think one of those reasons is that people, I mean, you see it a little bit now, but if you ask me, I think in the future, people will be piling out of the US dollar, US dollar
Yeah.
denominated assets. I mean, right now, the way I imagine the US dollar and the US economy is this, those Jenga games that you play as a kid, where you take one block from the bottom of the Jenga tower and then you put it on the top, and then
Yeah.
but each time you take that block and put it on the top, it destabilizes the whole thing. You can
Yeah.
see it growing. You can see the tower getting
Yeah.
taller, but that tower is all debt. And as it grows, it gets
Yeah.
weaker and weaker and weaker. And
It's
people
the
look and say, "Oh, the dollar is fine. Look at that gigantic tower hovering above us." But all it takes is
it's
that
the
that one little
ultimate
Jenga
pyramid.
block to have it all come crashing down.
Yeah, this is the debt system of the central banks. There's the ultimate pyramid scheme, and it makes Bernie Madoff look like Mother Teresa.
Well, I think he said he got the idea from the Social Security Fund.
Oh, totally, totally. That's exactly right. Doesn't surprise me a bit. I didn't know that, but it doesn't
Yeah.
surprise me. The thing that does surprise me is how many people, ordinary people that I talk to, who think the U.S. dollar is backed by gold or something, which it hasn't been for so long. That talk about
There's a strange ignorance about that
yeah,
for sure.
I mean, when you talk about money that we think of it has to be backed by metal, like gold and silver, it's not. I mean, what money is used that is backed by gold or silver? Like almost none. I mean, almost none of the fiat currencies that we use in around the world are backed by gold and silver. That's one thing. And the other thing is the gold market is totally manipulated, and so is the silver market. The values are manipulated. So, people say, well, they talk about a currency that's backed in gold and silver, and I say, you know what? I wish gold was backed by Bitcoin. And then you'd really have something. Because I trust Bitcoin a lot more than gold or silver. Because until we have quantum computing someday in the Star Wars future, there's no known way today to hack into it and break it. They're constantly, these super minds are constantly trying to figure out a way, and because they're concerned. I mean,
And it's an open source code, right? So
everybody can see
what
it.
that means is that any software savvy person or coding savvy person can go in and look at all the code of Bitcoin.
Yeah.
And so far, I mean, I've done extensive googling of Bitcoin, and I haven't yet seen one person come out and say, "Oh, there's a security flaw here." It just
That's
hasn't
right.
happened.
The smarter these security brains are, the more they get excited about it. We started the first Bitcoin meetup here, and as a launch off of that, one of the things we have is this weekly hackathon, and we have this weekly promote-a-thon. But this weekly hackathon among developers, and some of these guys like Mark is the first human being creating this free open source nuclear fusion reactor in his lab in Brooklyn. These brains, okay, these unbelievable guys, they get the smarter they are, the more excited they get. They sit there and jump up and down in their chair like going, oh my god, like little kids being told they're taking to Disneyland. They're going to go to Disneyland. You know, they're like the smarter they are, the more excited they are. You see Steve Gibson on Security Now on This Week in Tech network, and he's just so excited about it. You can just see it's the most exciting discovery. If you really understand this stuff, it's so exciting because you're like, wow, no. This is bigger than Twitter, bigger than Facebook, bigger than email. It's almost as big as the internet because we're talking about money.
Right.
I mean, money, ability of money to flow like water globally, a global currency. It's going to change everything. Micropayments, you can send, you can send a fifth of a penny to Tanzania, to the orphanage, the school, they're gonna whatever, and it costs exactly what you send. It doesn't cost $1.58
No fees,
to
there's no
send a
mailing
nickel.
charges or anything like that.
Yeah, I mean PayPal and all the Visas and MasterCards of the world. That's like I don't know. It's like the old. It's like the record industry, the record stores. I mean, even DVDs and CDs is so yesteryear. Digits on a Frisbee is over. And the idea of these transactional institutions taking a big percentage of every transaction of everybody on the planet is a great idea for them, but it's a really bad idea for the people of the world. And so this is like the people's money.
Right, because whenever you have a middleman, and no matter what it is, it always drives up the cost.
Oh, yeah. I mean, it's just exorbitant.
Yeah.
Yeah. I mean, again, it's like the record industry taking, making most of the profit. And the artist, you would say support artists and buy their records. But the truth is, artists made tiny fractions of those record sales. They make all their money on live performances and radio airplay. And they still do.
Yeah.
They still make their money on live performances. It's just the suits who make nothing but money. They just sit in boardrooms and make nothing but tricky manipulations and get a cut of everything. And this is the age of cutting out the middleman. There's no travel agents. I mean, you do it yourself, cut out the middleman. Everybody saves money and everybody benefits, except for the suits who make nothing but money.
Right.
So PayPal, I say bye PayPal, and even MasterCard, Visa. It'll be good riddance. Good riddance to the banks. Literally, I mean, if you don't need a bank, what do you need a bank for? If it's just like email, people are like, well, how can I buy?
Not to say that you couldn't have a Bitcoin bank in the future.
Well, sort of do. I mean, there are these web-based Bitcoin clients like mybitcoin.com, which is it's a great service. It's like web-based email for Bitcoin is a web-based Bitcoin client, so you can put your Bitcoin there and store it safely. And I recommend it because people, if you're not technical and you don't know how to, it's a file on your computer. So a file on your computer that contains your money. That's important. And they steal your computer, they stole your money. Or even if they get a copy of it, they stole your money. So if you're not technical and pretty savvy and know how to encrypt that thing and protect it, then don't even do it. I recommend you use something like mybitcoin.com. It's free. And right now, I mean, it's completely free, and they're not really a bank. They're just sort of like a basic bank. You put your money in it, and you can send and receive Bitcoin through it. So it's already free. So if there's more competition that comes along, it can't get any better, except more features, They have little ads like Google AdWords, stuff, but that's how they're supporting themselves, and they're not charging anything. So it's great. It's fantastic.